Thank you. As mentioned, Sandhosh Kumar. I'm a junior partner with McKinsey London. I've been at banking and technology for over 15 years. I started my career doing large-scale technology programs in banking. And for the last few years, I've had the opportunity to work with a number of banks on their digital transformation agenda and modernizing their platforms. I wanted to start with one of my favorite quotes. How do I? There you go. I wanted to share a bit of story, and you already mentioned what I want to say about my climbing experience. But back in 2009, I'd been a climber, and I had a lot of interest in trekking before that. And I went to Everest Base Camp with a few of my friends. And at that time, I looked at Everest, and I really wanted to climb it the following year. And my friends told me it's almost impossible to do it with just 1 year of training. But I pushed myself. I took the year off. I really trained for it. And eventually, I made it to the top. And one of the few things I learned from that experience was, one, being a bit more comfortable with setting yourself really ambitious goals, persevering through that. But most important was being adaptable, right? It's the difference between life and death on when you climb high altitude mountains. So why I wanted to share this is sort of the type of work I've also been doing ever since. I've had the opportunity to work with a number of clients and really setting ambitious goals and being able to bring agility and adaptability to banks. And even more exciting is that I think we are at an inflection point when it comes to technology and composable banking, that I think setting these ambitious goals and being able to achieve that in really shorter timeframes is getting more and more possible. So that's what I wanted to talk to you a little bit about. Many of you may know some of this, but I want to share a little bit about my perspective and what my experience has been. So I wanted to discuss a little bit about what are some of the challenges that some of our incumbent banks and fintechs face today, and how this inflection point in technology is actually helping banks with these challenges. And more importantly, based on some of my experience, what are some of the practical things banks are doing to be able to leverage this technology? So one of the first challenges, this sort of shows the return on equity over the last few years, and you can see a dip since the crisis. So it's been a challenging environment from a financial perspective for banks. After the crisis, the new normal is around 9% or so for return on equity. You have interest rates have been low for quite some time, so there's revenue pressure. Revenue growth has been slow. So the guys who are really going to succeed in the future are those who can really serve customers differently and more efficiently. And those are the guys who are going to succeed. The second big challenge, you know this already. We've seen lots of great movement from fintechs. We're starting to see them grow to really high scale and growing to multiple markets. There was a recent survey we did in one of the countries where I think 1 out of 2, 50% adoption rate, where at least 1 out of 2 customers at some point have a fintech relationship. We're starting to see about 80% revenue growth with fintechs in some cases. And not just fintechs, it's also the tech giants, right? You've got many of these players encroaching into the typical revenue pools of banks, especially payments, but also consumer finance, SME finance, in China, examples of wealth management. So the competition is definitely intensifying. And last and most interesting, as Eugene mentioned, customers are becoming more and more demanding. So this is a survey we run every year. It's a consumer retail banking survey with about thousands of customers. And it's sort of, we ask the question about, what is their willingness to move away from a bank for their financial needs. And you can see almost, in some cases, more than 1/3 of them are very willing to move. An interesting story where I was talking to one of my teammates, she's an intern, and she was very proud about the fact that she made Revolut her main current account. And I was asking her why she did that. And she was like, I'm just bored of my previous bank. So that's the kind of consumers we're going to have. I mean, I come from a background, my parents and I have had the same bank account for 15 years, but we're very quickly moving into a space where consumers are going to be able to switch to different banks super easily, right? And that's the kind of challenge we have ahead. Even more interesting, I was actually looking at this chart, and if you overlay an age group thing to this, the 25 to 35 were actually further on the right compared to the 18 to 24-year-old. So it was very interesting. So not all is gloom. Given the challenges, there are also some very interesting enablers, and this is where I guess we are here today. So there's been some amazing technology leap, especially with cloud and APIs. We've seen emergence of a lot of very, very innovative players that are focusing on very specific niches of services that are previously done within banks. So, I mean, I'm very, very happy to be in this space, but one thing I regret is that I wish I learned software engineering and coding earlier in my life so I could be even deeper. But still very exciting. I was talking to one of the tech leads. In fact, I forgot to mention this in the beginning, but as part of my experience, in the last couple of years, I have helped build two digital attackers for incumbent banks, helped build and launch it. And talking to one of the CTOs in there, he was talking about how we're moving into a space where the modern engineer, software engineer in a bank, is not about building new software, but it's about being able to stitch together the best solutions out there, right? So that's the space we're going towards. And even more interesting is the regulatory acceptance, right? Again, as Eugene mentioned, regulation has been more and more open. The conversation has moved away from whether we should move to cloud to how do we start to work effectively with cloud-native solutions. And we're starting to see a lot of innovation with open banking, PSD2. I think it was Yolt that from ING that was able to gain almost 500,000 customers in less than a year. So that's the kind of innovative things we're seeing. So how is this next-gen platforms helping? So in my mind, next-gen platforms and cloud-native solutions are those that, one, are cloud-native, API first, that, as you said, are table stakes, and doesn't require a whole bunch of technology folks to be able to connect and integrate to, right? So we're starting to see about 4 different areas where banks are starting to see benefits. Again, these are known to you already, but cost is becoming more important than ever, especially as you see the financial pressures that banks are facing. I think about a few years back, 60% cost-income ratio was considered quite good. But we are starting to move into a space where, as you start to touch the core and become more modernizing the core, you can start to see cost-income ratios that can fall below 50%. There are cases where, for example, I'm working with a bank where the technology strategy budget over the next few years is a few billion, and at the same time, they are able to build a completely greenfield attacker bank for a fraction of the cost. So really, there are some very interesting benefits that we're seeing in the cost space. Again, this is obvious, accelerated time to market. I think banks have come a long way when it comes to this space, especially when it comes to mobile banking or internet banking, especially customer-facing apps. We're starting to see 2-week release cycles, but there are often limitations. Once you start to really want to innovate, you start hitting your core, and they are still in your quarterly release cycles. So what we're starting to see, especially with these next-gen platforms, is this, where you're able to get to market much, much quicker, right? Not just new features, but also new product sets. Again, talking to one of the product owners who is working in this Greenfield attacker bank with us, one of the things that he's most excited about is the fact that he could think about an idea and be able to see live in about 2 to 4 weeks. And even more so, it's fun to be in an environment where it's not just product owners that are deciding what should be the next idea, right? It's engineers, designers are coming up with ideas, and we're seeing really a lot of interesting innovations. So banking is getting more and more exciting nowadays. Again, Eugene mentioned this before, state-of-the-art customer experiences. And this is, again, one of the key benefits. I come from Singapore, and I came to UK about 7 years back. And I had a very interesting account opening experience. So I started the experience online, but I still had to go to the bank and provide all my documents. And it took about 3 to 4 weeks before I could get my account number. Now we are moving into a space, again, working with the bank, where you're able to work with partners, open an account, do your ID verification through selfies and document photographs, working with a fintech partner. You can do AML sanctions working with another fintech partner. You can do a credit check. And all of this in a matter of minutes. So you can actually get an account opened end-to-end within about minutes, right? So the example we have seen in one of the attackers we're working with, the record time for an SME account was 6.5 minutes. Interestingly, we were doing a bit of a customer research, and we were showing this, and it was almost, the customer's feedback was, it's too quick. I actually don't trust it. Right? That's the kind of experience we're moving towards, because they're too used to waiting for about 2 weeks to open an SME account. So again, massive leapfrogging innovations within this space. And last and more interesting aspects for me is the ability to grow through partnerships and whole ecosystem. So we did a survey with about 100 global banks, and about 80% of them mentioned that they have some sort of a fintech partnership. Majority of the space being in payments, lending space is also growing plenty. Taking again the example of the Greenfield attacker, they were able to go to market from start to within about 9 to 10 months with live customers, mainly because they work with about 20 plus fintechs. And without that, they would not be able to get that kind of pace. Even more interesting is, with these partnerships and the new technology, there are different functions of the bank that's starting to change the way they work as well. As an experiment, to satisfy the procurement department, we ran an experiment where we were able to switch from one fintech provider to another fintech provider within about a week or two. And this sort of gave a lot of comfort to procurement, because they're used to working with partners and building a long-drawn RFP process that'll set and create relationships for the next 5 years. Right? And now suddenly you have the opportunity where the switching cost is far lower, and the relationship becomes very value-based. What may be a very sound relationship now may not be the same 6 months or 2 years down the road. And for fintechs or banks, they could easily switch out to move to the next best innovation. So really very interesting space, and especially from a banking perspective, this is changing the way they're able to scale. So we've seen what are the benefits, but what can banks do? I really love this cartoon because it's like spot on for what are many of the banks facing today. Even though all this innovation technology is right there, it's a struggle for banks. It's not easy because there's a whole bunch of programs that's ongoing, and it's not easy to be able to switch on to these new wheels while you're on a journey. So what can they do? What are some of the examples that we're seeing from a banking perspective? I see 3 areas where banks are focusing. One is a bit more of a traditional core replacement, where you look at your existing core, and probably it's as the core is running out, you want to replace the entire core, and you build all the functionalities and complexities that existed in your previous core. And then one fine evening, you just move on the entire customer base. Now, extremely high-risk option. We have seen this go wrong a few times. A few examples have come in the news recently in UK. But this is unfortunately the only solution for many of the banks. I was working at a bank in the Far East where they have a co-banking license that's running out in 2 years. So they have to find a way to replace. And we looked at various options, including cloud-native options, but given their product complexity and customer complexity, they had to opt for an on-prem solution. However, they are actively seeking the middle layer and front-end application area where they're looking to leverage as much of the cloud-native solutions like IDN verification, et cetera, to be able to modernize as much as possible, right? So very high-risk option because, again, we've seen many cases where co-banking platform replacements have not gone on budget, not on time, and there's a steep investment. So for these reasons, banks don't prefer this option unless they have to. But the second option is probably one of the most popular options, especially a space that I've been working in until a couple of years back. So this is where, again, many banks have gone through this sort of transformation in the last few years, where you focus on the value-specific areas, starting with customer-facing applications, again, like through mobile app or internet banking, where you digitize and provide a good customer experience. Then you start to look at the next layer of services. We call it hollowing out the core. We're able to bring in some of these services like IDNV, make them microservices, or leverage third-party solutions. And the idea is that over a period of time, you hollow out the core and make it reduce the dependency on it. And at some point in the future, you'll be able to replace and move on to probably a cloud-native solution and modernize the entire platform. So this is probably the least risky option. You can take your time. And we've seen cases where it can take up to 3-4 years for a full transformation. And again, because of the time, it can take a fair bit of investment as well. But the thing I'm most excited about, and I guess a lot of us are here today as well, is the third option, building a Greenfield tech stack on the side. It's almost, it's more popular in scenarios where banks are keen to either develop a new proposition or wanting to enter a new space, new market, new segment. And so it's an opportunity for them to build something from scratch. and a perfect case example for completely cloud-native platforms. Again, the bank I've been working with, they've been a very primary retail player. That's the space they've been very strong at. And they wanted to enter the SME space. And they've tried, they've had a couple of false starts. And eventually, they decided to go on a completely cloud-native solution. And again, it took them about 9 to 10 months to be able to put live customers on. So extremely quick, especially when you're leveraging fintechs. From a cost perspective, again, fraction of cost compared to some of these big transformations. But what we have not yet seen is really that arrow of moving existing customer base onto these Greenfield tech stacks. So still very early, but certainly the direction I think we're heading. And hopefully in the next couple of years, I'd like to see more and more examples where you're able to, where cloud-native platforms are going to become the core, or primary core, for some of the existing banks. So where are we? We've seen the challenges that banks are facing. We know some of the benefits. We know what are some of the directions that banks are taking. So given the challenges, I see there are about 3 paths that banks can take, especially leveraging this tech. One, either they're going to become a low-cost manufacturer of banking products, which means they're going to optimize cost, digitize as much as possible, and be able to get to cost-income ratios of almost 40%, and that's the growth path. The other option the banks have is to become an end-to-end ecosystem orchestrator. So where they can really become the one-stop shop for customers, offer products that go beyond the legacy banking products, and open up their platform to other solutions out there. And the third option is for banks to become a really niche player, extremely strong in either one product set or a specific customer segment. And I think these are probably the only 3 stages I personally see banks heading towards, where they're going to continue to generate value. And the best part is, with all 3 strategies, I think you need to leverage these modern core platforms and modern cloud-native solutions. So thank you for listening to my story.